Hi, this is Brent with another chart breakdown for trade therapy. Today we are looking at Amazon. We did our clarity spotlight on Amazon last week. Today is Wednesday, October 16th, and it is just after market close. This is all-time clean monthly chart for Amazon. We like these all-time charts because it's a great way to get a feel for where something is at in its institutional business cycle. We did update our all-time trend line here to better reflect where Amazon is at currently. We'll talk a little bit more about that in a moment. Amazon obviously came out hot during the dot-com bull market. It distributed and marked down. We see a classic accumulation structure here with a Wyckoff spring. As it worked its way up to its all-time high, it reaccumulated here before going on this massive markup campaign that culminated right at COVID. And then in the post-COVID market, it did distribute and mark down and accumulate here. These all-time charts are a great way to get a feel for, how deep did this pullback, how deep did this pullback get? What I mean by that is we can see that Amazon spent a considerable amount of time below all of its monthly moving averages except its 200-month exponential moving average. That's this blue one. But we can see that it got down below its red. This is the 55-month exponential moving average. It got down below and stayed down below that. And really, it's only been that low one, two, three, four, 5 times has it gotten down below its 55-month exponential moving average. So pretty significant pullback, pretty significant markdown campaign. We jump over to a little closer view of that. We see these two shelves here. We talk a lot about in trade therapy content. Again, if you're not reading it, you should. We talk a lot about this volume profile and how this upper shelf right here is the retail investment community that bought the top. They were buying here all of the hype during COVID that Amazon was going to keep going because everybody was in lockup and everyone was ordering. That was an ideal opportunity for institutions to distribute. You do see the second shelf down here. This is your institutional shelf. This is where they reaccumulated before the COVID run. We also talk a lot about in trade therapy content that it is very common to see something distribute and mark down and then accumulate at the previous reaccumulation level. A classic example of that, we see this beautiful cut base that Amazon formed as it went through its post-COVID accumulation process. It has gone up and again reached all-time highs where it is going through what looks like a reaccumulation structure here, very similar to what it did previously after the dot-com distribution and markdown process. Added a few details here, the Wyckoff tags. For those of you that are studying up on Wyckoff, these are great, essentially just kind of signposts, or if you're mapping it out, this is a good way to identify where something is at what are the next steps that could be expected based on confirmations that we've gotten so far. So what I mean by that is we do see this classic accumulation structure. We do see a jump across the creek. We talk a lot about how institutions create the path of least resistance. It has a lot to do with this wick right here, where they run something up very quickly. They're advertising that, hey, Amazon's about to come busting out here because they want to lure everyone in. They then turn around and take them all out of the trade before they take it on a big run here. They don't want people that come in and chase to sell into them when they're looking to move something up and out of the range. So that's the strategy behind it. Once they get up here, they'll go, it set a minor sign of strength. It will back up to the edge of the creek, which is this imaginary line that kind of connects all of these peaks right here. Again, this is creating the path of least resistance so that they can take it up to all-time highs. once they clear out all of the people that are chasing at these levels right here. So there is method to this madness. I would encourage everyone to study up on Wyckoff. I could spend an hour talking about each one of these individual tags, from a buying climax to an automatic reaction to a selling climax with stopping volume. It is worth it to invest the time to study up on Wyckoff and understand what the strategy is behind what institutions are doing. Um, we'll take a look. We'll zoom in to the daily chart to get a feel for kind of where things currently stand. We did talk about the possibility that Amazon is not going to come down here. And we've been talking about for the past few weeks, past couple of months, I'm sorry, about October volatility, about presidential election volatility, and the possibility of an ABC developing where institutions may come down and go after a liquidity grab underneath this low right here. Um, it's beginning to show kind of subtle clues that that may not be the case. That may not be happening. What I mean by that is if we zoom in here, what we see is back-to-back doji candles. So Monday and Tuesday this week formed back-to-back dojis right above the moving averages right here. That typically is not something that would be indicative of a sell-off or a pullback down here to go after liquidity here. These are supportive candles. Generally, this is a standoff between buyers and sellers. You see that sellers were able to push the price down, but they were not able to maintain these levels. Price buyers did step back in and retake these moving averages. It's currently holding that. These are subtle signs that demand greater than supply conditions are taking hold. There are some other subtle clues, some advanced Wyckoff analysis. When you look at these reactions to an all-time high, the initial reaction is very big. The second reaction is very small. So when you see decreasing wave strength, that's an indication that demand greater than supply conditions are taking hold. We are looking for the possibility of a breakout after the election, coming up to all-time highs and then back testing this resistance level, and then potentially moving up and out of the range up to the first target level, which is this 1618 of this last wave right here. This is our first target right around 240. We're not in Amazon. If we were, this is how we would be trading it. This is what we would be looking at. If we were in it, we would probably have stops set just below this moving average cluster. Again, these dojis right here do not indicate that it would be coming down here, but it is late October. There is a presidential election coming. And conservatively, if we were in it, we would probably have some stops set in case they do make a run for this liquidity. If they do make a run for that liquidity, we would want to be out, or at least out of the portion of our position that we would be looking to compound. We would then buy back in here, probably trading off of this 200-day exponential moving average here. Anyway, I hope that was helpful. And again, if you're not reading trade therapy content, you should. Thank you very much.